Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 29th, 2025, and we're diving into Amrize's third quarter earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Amrize's performance, especially as they navigate their first full quarter under the new brand.
Revenue and profitability overview. Let's start with the top line. Amrize reported a revenue of $3.675 billion for the third quarter of 2025, marking a 6.6% increase from last year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by strong demand in their building materials segment, which saw an 8.7% increase. This was supported by infrastructure spending and commercial investments, despite a softer residential market. However, net income slightly declined to $543 million, with a diluted EPS of 98 cents due to higher costs from a temporary equipment outage in their cement network.
Segment performance and challenges. Amrize's building materials segment seems to be a strong performer. Can you elaborate on its performance and any challenges faced?
Absolutely. The building materials segment reported revenues of $2.774 billion, an 8.7% increase driven by strong volume growth in cement and aggregates. However, they faced challenges with a temporary equipment outage in their cement network, which increased costs and affected margins. The building envelope segment also saw modest growth, with revenues up 0.7% to $901 million, benefiting from commercial roofing demand.
Cash flow and debt management. Let's talk about cash flow and debt. Amrize reported an operating cash flow of $854 million and a free cash flow of $674 million. How does this impact their financial health?
Amrize's strong cash flow generation is a positive sign, allowing them to reduce net debt to $4.985 billion. This improvement in net debt was facilitated by repaying $385 million of commercial paper. Their net leverage ratio also improved to 1.7x, indicating a solid financial position to support future growth initiatives.
Guidance and strategic initiatives. Amrize has raised its revenue guidance for 2025. What does this indicate about their strategic direction and market outlook?
Raising the revenue guidance to $11.7 billion to $12 billion reflects confidence in their market position and growth strategies. They are focusing on organic growth projects, such as expanding production in key markets like Dallas-Fort Worth and Calgary. Their commitment to operational efficiencies and synergies through the Aspire program positions them well to capitalize on long-term demand in their $200 billion addressable market.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of a ones, but Amrize reported an EPS of 98 cents. What are your thoughts on this miss?
The slight miss on EPS can be attributed to the higher costs from the equipment outage in their cement network. While the revenue growth was strong, these unexpected costs impacted their bottom line. However, the company's strategic initiatives and raised revenue guidance suggest they are on a solid path forward.
Key takeaways. In summary, Amrize has delivered strong revenue growth and improved cash flow despite some operational challenges. Their strategic initiatives and raised guidance indicate a positive outlook. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Amrize's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Amrize's performance in the comments below.